Imagine standing at the edge of a vast financial ocean where August's winds whipped the waves into a frenzied dance of red and green. And you wonder whether the doldrums of this month are a harbinger of doom or the calm before an altcoin hurricane. Historically, August has proven to be a time of treacherous currents for alternative cryptocurrencies. In 2023, the altcoin market cap tumbled by 28% before surging over 140% in the following months. And in 2024, a 40% drawdown gave way to an equally dramatic rally, leading many to whisper that the cycle is etched in blockchain code itself. This year, 2025, has not broken from tradition. Altcoins have slid 13% from their recent peak, and chart watchers fretted as the decline threatened to extend another 8 to 10%. Before a potential low is reached at first glance, the pattern seems almost mechanical, a ghost to weakness. September's strength, yet beneath the surface lies a complex interplay of sentiment, capital flows, on-chain fundamentals, and macroeconomic forces, each capable of derailing or propelling the long-awaited altcoin breakout on one side. The repeating August slump may simply reflect a seasonal rotation of capital as traders lock in gains from summer rallies. They shift profits back into fiat or into Bitcoin, driving altcoin prices lower. This rotation can be exacerbated by the expiration of futures contracts or by tax loss harvesting strategies turning focus towards realized losses, both of which add to selling pressure in late summer. If this cycle is driven purely by predictable market mechanics, then savvy participants might front-run the downturn by shorting altcoins in early August, only to unwind positions as September arrives, fueling the next leg up with fresh buying. Yet cycles driven by mechanical flows alone can break if underlying conditions change. If broader market liquidity tightens due to hawkish central bank policy, or if global risk appetite wanes amid geopolitical turbulence, the post-August rebound may falter, leaving altcoins mired in a deeper slump. Rather than preparing for a breakout, overlaying this seasonal cycle is the critical role of Ethereum. It's often crowned the bellwether for altcoin seasons on social channels. Bullish prognosticators have eyeballed Ethereum's trajectory as proof that the broader market's fortunes rise and fall with ETH's tides. Eric Trump's call to buy the dip on both Bitcoin and Ethereum, while colorful, echoes a long-standing market truth. When ETH demonstrates strength, particularly by holding key support levels or by advancing to psychologically resonant milestones like $8,000, it energizes the narrative of a looming alt season. Ethereum's current price action, hovering just above its recent range lows, tests the resolve of bulls and bears alike. A decisive break above $7,500 on strong volume would not only validate the bullish thesis, but also crack open the gates for capital to flood into smaller cap projects that are statistically more sensitive to Ethereum's leadership. Conversely, if ETH fails to reclaim critical levels and instead drifts back toward $6,500, the fracturing confidence could precipitate another leg of selling in altcoins, shifting the narrative from accumulate to liquidate, and the much-anticipated breakout might be delayed or truncated. Adding quantitative rigor to these anecdotal observations is the ALTCOIN Season Index, an on-chain metric that measures how much of the total market is capturing more gains than Bitcoin historically. Values above 75 have signaled that altcoins are truly in season, while readings below 25 suggest Bitcoin dominance. As of early August 2025, the index sits near 45, a midpoint that implies altcoins are neither in full bloom nor completely dormant. The trajectory of the index matters. If it accelerates upward through August's waning days, it may confirm that the longer-term bull trend remains intact and that the slump has served as a shakeout, clearing weak hands should the index stagnate or reverse. However, it will underscore that the altcoin rally was, at best, a transient spike, cautioning investors to temper expectations for a broad-based breakout. Further nuance emerges when examining Bitcoin dominance. After cresting above 65% in July, BTCD has retraced to around 62%, signaling that capital is trickling from Bitcoin into altcoins. This dynamic reflects genuine investor rotation, with Bitcoin's volatility compressed by mature, market forces, and increasing institutional participation. Nimble traders seek outsized returns in less efficient altcoin markets. Yet the reversal of dominance is not an unqualified bullish flag. It can also indicate speculative mania that precedes a swift collapse. If capital exits altcoins too aggressively once the next Bitcoin correction arrives, the rapid unwind could inflict greater pain than the August drawdown itself. The depth and sustainability of the shift in dominance will ultimately determine whether the move portends a broad alt season or merely a fleeting opportunity beneath market structures. On-chain metrics offer a contrarian perspective. Wallet growth and developer activity on key altcoin projects can presage or refute the hype cycle in years past. August's lull often coincided with stagnating user growth as holders focused on adjusting portfolios rather than engaging with decentralized applications. However, anecdotal data from Ethereum's network activity hints at renewed interest in decentralized finance and non-fungible tokens. Even amid price weakness, a potential sign that real economic usage is gearing up behind the scenes should these metrics continue to tick upward. They would provide fundamental ballast to price movements, suggesting that the slump is a market clearing mechanism rather than a collapse of intrinsic value. On the other hand, if developer contributions plateau or if on-chain transaction volume contracts further, the bullish narrative weakens, as declining network health often precedes. Price declines in token economy's macro conditions also weigh heavily on the altcoin outlook. August of 2025 has seen a mixed bag of economic indicators. Inflation data from the United States showed modest cooling, giving central bankers a moment of pause, but global growth forecasts remain tepid amid trade frictions and regional conflicts. If policymakers are on the side of caution, steering monetary policy toward lower interest rates or maintaining dovish language, risk assets could receive a jolt of liquidity that revitalizes altcoin markets come September. Conversely, if central banks signal further rate hikes to combat sticky inflation, capital allocation will skew toward safe havens, leaving the cryptosphere vulnerable to tighter financing conditions. Additionally, any breakthrough in regulatory clarity a favorable ruling on spot Ethereum ETFs or new guidelines for decentralized exchanges could catalyze a buy the rumor, sell the fact scenario, where prices spike on positive announcements, only to retrace once the details are digested. Therefore, investors must monitor the evolving policy landscape as closely as technical charts. From a sentiment standpoint, social media remains a double-edged sword on platforms like Twitter and Telegram. Bullish memes about earnings season and altcoin moons can stoke FOMO and draw in fresh capital, accelerating the breakout many anticipate, yet the same channels can amplify fear, uncertainty, and doubt, publishing speculative claims about impending sell-offs or spreading rumors of liquidity crises in crypto exchanges. Market psychology can pivot on a single viral post, turning optimism into panic within hours. As such, discerning participants will weigh social signals against objective data, avoiding the trap of crowdthink that can send altcoin valuations to unsustainable heights before a brutal reversion. Technical analysis further underscores the fine line between opportunity and risk. If altcoin prices carve out higher lows and higher highs in late August, breaking above resistance clusters around key Fibonacci retracement levels, for example, the 38.2% and 50% marks of the summer decline, chart-based traders will pour in, driving prices toward multi-month highs. On the contrary, a failure to sustain these technical breakpoints could validate the bearish scenario. Renewed sell orders might cascade into stop-loss triggers, exploiting algorithmic strategies that penalize any hint of weakness. Volume is the arbiter of these moves. Without a substantive rise in trading volume, any breakout attempt risks being a false dawn, quickly neutralized by sellers. Conversely, a surge in volume, particularly from spot markets rather than solely derivatives, would lend credibility to the breakout thesis, signaling genuine buy-side conviction. Risk management strategies are paramount in navigating this precarious moment. Traders aiming to catch the upside should consider staggered entry points, layering into positions as altcoins breach critical thresholds, while simultaneously setting protective stops to guard against a deeper correction. Meanwhile, Conservative investors might employ dollar costs averaging throughout August's range, reducing exposure to timing risk while capturing potential upside. When the market turns, portfolio diversification, too, plays a central role, allocating capital across a basket of top-tier altcoins. Rather than placing a concentrated bet on any single project, can mitigate the idiosyncratic risk that plagues nascent tokens for those with access to structured products. Option strategies such as selling covered calls or buying protective puts can further buffer against volatility while allowing participation in the anticipated rally.